From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 18th, 2017. Today we're going to be taking a look at the GBPUSD, Greater British Pound, versus the US dollar. Starting on the daily time frame, we can see that this currency pair clearly has been in an uptrend. It's been on the rise for the past several months, actually going all the way back to January, the beginning of this year. We started all the way down here at the bottom left-hand side of the chart. And we've had some ups and downs throughout the year, but for the most part, we're in an uptrend because the price is much higher now than it was at the beginning of the year in January. So clearly an uptrend. Even in the most recent weeks, we've seen an uptrend along the red trend line that you see here up at the top of the chart. So that becomes our main focus. Buying on dips into support, on retracements back lower, that becomes an opportunity to go long in the direction of the trend. And one difficult part about this is the fact that we are at the highest peak high of the trend. We have been very close over the past couple of days to the highest high that has been all year long, and so it becomes difficult to buy at the highest high. So when do you buy? If you're going to buy the uptrend, you want it to pull back. You want it to come back down. And that's what we've actually seen today. We've seen a little bit of a pullback. With some news earlier today out of the UK, we've seen this currency pair pull back down. So it gives us an opportunity to look for some other indications of potential support and for this to return back in the direction of the trend. A couple of things that I would just note here. First off, the blue circles that you see here at the top of the chart show us historical resistance at the purple shaded area between 1.3005 and 1.3030. That shows historical price action resistance, but price action telling us that buyers and sellers were exchanging hands. The market tends to make trading decisions, buying and selling, at very familiar and consistent areas. And that's what we see, those historical resistance helping us identify this area as a potential future support into that purple zone just above the 1.3000 level. Of course, we have that even price handle as well, 1.3000. Let's go ahead and zoom it in here a couple of times on the daily time frame. I want to do two other things here. First, I want to take Fibonacci and draw from the lowest low of the red trend line to our current resistance high, which actually is today's candle. So the lowest low to today's high puts the 236 Fibonacci retracement level just underneath the 1.3000 level. Actually, just right at 3000 is 1.2999 or something like that, right here on the blue dash line under the purple zone. So we now have identified Fibonacci into that same area where there was resistance, offering us a clue to support. Let's do another one. Let's take Fibonacci from this most recent low right here in the middle of the trend where the red trend line touches, and again going to that current resistance high. And now once again we see Fibonacci overlapping here at the bottom of the purple shaded area. The 382 Fibonacci retracement level sits at 1.3005. which again is the bottom of our purple shaded area. So right now we've identified two Fibonacci retracement points, historical resistance within the direction of the trend right here above 1.3000 and that purple shaded area. So our expectation at that point is that the market holds that barrier and bounces back up in the direction of the trend. And the risk is pretty easy. The risk is that it breaks underneath there. So you don't want to risk too much. If it breaks through that purple zone, it's probably going back at least back down here to this green zone. So you want to be use appropriate risk strategies in case it does break down back towards the green shaded area. Of course, our targets are pretty simple as well. We want it to go back to the last resistance high, which is right here into the mid to upper 1.3000s, and of course a breakthrough there, we would look for the next resistance high to be our next target. So that's the main focus we have today, is buying in the direction of the trend. 4-hour time frame, not really going to change any of that, just gives us a little bit of a different vantage point to that. You can see the resistance high back here. You can still see the Fibonacci levels living here inside the purple shaded area. All of that remains the same. We just don't want it to break underneath the purple shaded area today. In fact, we'd love to see it take another run at the highest peak highs, the orange zone, or higher for the pound dollar. One last thing, Forex Black Book trend bar is green. With that, we're looking for a new buy signal, and a good example of that, and I'm actually going to grab this blue circle right here and I'm going to bring it down to right here. See how the market came down into support? The yellow shaded area gave you 3, in fact, green arrows in a row, and eventually the market shifted its momentum. Remember, the Forex Black Book is a momentum indicator, and the arrows show us when the 4-hour time frame is shifting momentum back in the direction of the longer term trends, which is highlighted with the green trend bar at the bottom. So at this point, we haven't seen a new green arrow, but this is the place where we'll start to look for them to develop. As it dips into support, we look for that development of a shift in momentum to go back up in the direction of the trend for the pound dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.